Welcome to the Show Me the Money podcast, Unlocking Property Finance. Join us on an exciting journey into the world of property finance, where we uncover secrets, strategies, and opportunities that can turn your property dreams into a lucrative reality. Welcome to Show Me the Money, Unlocking Property Finance.
Hi everybody, welcome back to another one of our Show Me the Money live episodes, and today we're delighted to be joined by good friend Helen Turner, who we'll introduce in a second. But as a quick reminder, everybody, I'm Sharma, a London-based property developer and investor, and my co-host.
Hi everybody, my name's Marc and I am the Managing Director of Wolf Financial. We're property finance brokers based in Essex, London, but we cover all of the country as well. And we're very honoured and very glad to have Helen along today. Welcome, Helen.
Hi everybody. Thank you so much, Ro and Marc, for having me.
It's a pleasure. Helen, many people know who you are, but there are many people who don't know who you are as well, I'm sure. So let's tell the world about Helen. Tell us a little bit about your background, what you've been doing in the last few years, because there's a fantastic success story there as well. And then we'd love to hear about what your new venture is.
Yeah, absolutely. So I came into the property world pretty much by accident. Really, I was very much interested in disruptive tech startups. I went through a phase of being completely obsessed with the idea of building unicorns and, you know, how I could get into that space, involved into that space. And I actually set out to consult, because my background is in commercial businesses as well as marketing and sales. I gained the confidence to come out as a consultant to help founders of disruptive tech businesses. Did that for a few years, and then I met a gentleman called Van Vogstad, who had this crazy idea about disrupting the property rental management space with his technology. And so we built software, and I helped to launch as a co-founder that brand, Coho. For a few years I was working on that. In the meantime, I had built a really good network of property space influencers and property developers. Really fell in love with the property space. So, you know, fast forward till probably about 4 months ago, I realised what we've been doing is disrupting and helping people in delivering better experiences for managing properties, rental properties, as well as delivering much better customer service to tenants. And I saw a gap, you know, a real gap in the bigger picture, where there's not enough rental property being brought into the market in the UK in the first place. So at a time where I realised that I'd come and done my bit for Coho, as in bring it to market and prepare it to scale, I realised that I wanted to carve out some of my own time to do and follow this additional passion that I have. So I recently started a new initiative called Angels.Life, where I'm actually creating a community for angel investors, private investors as well, to support this initiative to accelerate the delivery of UK rental supply because of the gap. I think that there's, if I can pull together money, knowledge and skills, then we can perhaps do a lot more and a lot faster for this space.
Fantastic. And I have to say, with your time with Coho as well, you know, you've put on some fantastic events, namely the HNWI Awards, which many people would have attended and seen, which has been a fantastic initiative, very enjoyable, great networking, some high quality content. So congratulations on your amazing achievements with both Coho and running those events. So
Thank
property angels, this is a really fascinating space, because Mark and I often do these talks where we talk to lenders, we talk to underwriters, we get a lot of people on the lending, on the debt side, who come and share their nuggets of wisdom to help investors and developers to prepare themselves to be more effective when they put their applications in for funding deals. Now, as we know, within the capital stack, it's not just about the senior debt. There's normally a tranche of equity element of funding that is required, which quite often requires private funders to get involved. So tell us a little bit about your experience of how Property Angels came to life, and I guess what the model is, what you're trying to achieve with it, and how perhaps some of our listeners might better benefit.
Amazing, yes, of course. So, like I said, having spent several years quite deeply immersed in conversations with property developers, of course, at the time, the conversation was very much about how they could optimise their management and efficiency within the business. But more recently, I've been having conversations with definitely about how they can continue to grow at a pace that they want to and they feel comfortable with. And one of the missing elements is just that kind of orchestra of balancing how they raise finance and how they fund these projects, and gets to a certain point where dealing with private investors is very different and seen as attractive only if the money comes with a good relationship, I guess. There is a lot of appetite for it, and for me, I think that where it's not just about money, it's about purpose as well, what you're actually going to do with the money. And so then the relationship is really important. I think that not anybody, but it is very easy to see a deal that looks very attractive and the numbers, and you have to do the due diligence to actually check on those deals. But for me, the most successful outcomes are where you've got investors who can actually afford the risk of investing, but also those that, if the outcome is good, that they could potentially repeat their investment with you, and that is definitely something that is very, very attractive. Now, what I find is difficult is that developers don't necessarily have the skills, don't necessarily have the personality to go out and raise funds, although it's part and parcel of their ongoing sort of work. Their skill set, I see, comes in the way of finding good deals and developing them and adding value to them. Excuse me. So I'm finding that people are kind of claiming to spend so far too much time trying to engage with angel investors, and also I think that there's a massive problem with angel investors not necessarily understanding or not having the confidence. I think what stops progress is not having the confidence to actually move forward. So there are a few elements that have to kind of come together, but I think the first, I think it's quite unique. What I want to do is actually build a community of investors who may or may not already have experience dealing with within the property space, and help them understand the various elements that are involved in getting the due diligence over, but also to bring compatible people together so that we can actually fast track some of that ice-breaking phase of meeting the right people together. Your sound, I think, Ro.
Just because somebody has money and you're after money doesn't necessarily, as you say, make you the right match. So that's really interesting how you help people to, I guess, to understand whether they're a good fit for each other. Yeah. Perhaps tell us a little bit more about how that works.
Yeah, you did ask me about the business model. So, I've got 3 elements that I'm trying to put together. And, the first part is learn. Learning is obviously, there's a lot about, what are the various strategies. There are so many different strategies. I think there's an inundation, almost like information overload, You may well be interested in investing into the property sector, and a lot of the educational content that's out there is very much geared towards somebody who wants to build their own portfolio. That's what I see anyway. So you might go to a networking event and, you know, all the talks and everything's all around a lot of the like details that you may or may not need to understand at an early stage when considering in investing with another party, because essentially what you're looking for are people who are very capable of, you know, navigating those strategies and finding the right deals. And, you know, what I think that to begin with, what's really important is that you find people. There's somebody called Max Rayner who's written an article for the website. So on property Angels.Life, I am hosting articles that are written by property professionals who are influencers in the space, to help kind of break down some of the terminology and some of the things that, whether it's, you know, to do with property strategy, you know, the legal aspects or the financial aspects of due diligence that needs to be done. And I think that that's really important as a first kind of, you know, just to break through that initial understanding of what the scene is like in this industry. And then the second element is discover. So if you join the Angels Network, there is this very small subscription fee that allows you to access an area within the website so that you can see a directory. It's small and it's controlled. A small number of 10 participating developers who I've created relationships with over time, and have got to know them as people as well as their businesses. So that hosts kind of a business overview about what their business looks like, who they are as people. There is an interview so that you can essentially get to meet them without sort of finding the pressures of needing to meet them in person beforehand. So you can really explore and discover them along with some case studies of their past work, so you can get a really good picture from a first sort of introduction point of view to who they are and what they might be like to work with. And then connect is the third element, and that is to do with okay, I like what I see. I think I could have a conversation with this person. I'd like to be connected to them. So this is the value that I'm adding in terms of bringing them together, the two parties together, to have those conversations. So along with the website, I'm also hosting a 2-day event in November. This is the first of the season, where I will be bringing 10 angels. So they could be private individuals, high net worth individuals, they could be sophisticated investors, as well as those with successful revenue generating, profitable businesses that might want to lend from business to business in that scenario. So I'm hosting a private dinner party for 10 angels with Adam Lawrence as our head of table, who, if anybody knows him, is a highly respected property professional in this space, an influencer with his highly anticipated weekly Sunday supplement. So then the second day agenda involves a bit more of a structured experience, which is a workshop. It's a couple of hours of workshop. We focus very much on the due diligence side of what you might expect. We cover some case studies. There will be 4 property developers that will come along and showcase about who they are and their business. And there's also the connect element as well at the end, where you can actually meet and ask your questions. I think it's really important to kind of get those phases before you start delving into the details of the numbers of any potential deal. Just make sure that there is compatibility from the outset.
So looking at this from my world, the finance side of things, when any transaction happens and there's an investor involved, there's a lot of questions asked by the lenders, due diligence and anti-money laundering, all those sorts of things. How do you overcome that? Because I know lenders are getting even more hot on this subject at the moment.
Yeah, absolutely. I will always recommend a third party who is qualified to be able to give that kind of advice. The role that I want to play is very much on the human element. When I first started, I started asking a lot of people about the due diligence process. Now what I see is that there is no necessary long hard list that it's not like a tick box exercise. There are legal elements, there are financial elements, and then there are market elements as well as a human aspect. And you need to do all of those. Now, if it's a sophisticated investor, perhaps they may feel that they do, because again, lending privately is not a regulated space, right? So doesn't mean that you shouldn't be seeking professional advice. All over my website, I'm suggesting that you get your own professional advice to help you on your due diligence. Now, on due diligence, there's also something that I believe is really important, that like you can get the professionals to obviously help guide you and get the the professional advice on various things, but I also believe in equipping people with what they need to find out so that they can. I think it's really important to be able to take that ownership. There are a lot of parties in this space who will do a full stack due diligence process, and that is also something that I'm interested in partnering with somebody to be able to offer in a situation where an angel investor would like that service. But I think that it's very easy then to kind of give the ownership to that due diligence party, whereas I think it's really important to understand what it all means and to take the ownership of the due diligence yourself as well.
And how about source of funds then? Because that's something that we've been told we've got to prove it more and more depth.
Yeah. So this, again, like anything to do with AML checks, that would be, to me, somebody, a compliance officer that would be recommended to actually do that. And quite often during the transaction stage, there will be recommended legal advisors from the developer side to be able to go through this, or you could engage your own legal advisors to actually do all of that for you. So it is the deep due diligence checks is not something that I will personally offer, mainly because I am not qualified to do that.
Yeah, because when we present a case to any lender and there's an investor involved, we now, probably in the last year, have to prove where the funds came from that investor. So bank statements from the investor, how has that been generated? What's the source? And it can be quite a long trail, especially when entrepreneurs have lots of different sources of income. So I think that's going to be something that's going to get hotter and hotter. And I think it's obviously a part of the industry that's needed to be tidied up, which is good for everybody. The visibility and the things that the banks are bringing in to make it easier to see bank statements and cross-referring between different banks is really important going forward, and hopefully will make the process smoother for everybody.
Absolutely. And actually, anti-money laundering checks, it is a hot topic, and there is actually an article that's on propertyangels.life if you want to go and have a look at the blogs there, by Bushra Mohammed, who is a qualified solicitor and offers advice on the compliance side of property deals. So I'm surrounding myself, with people who can offer this kind of advice, and if any angels that actually don't have their own contact and need recommendations, I can always do that too. It isn't part of my my sort of money generating model, working with third parties specifically at this time while I get started, but through my own network I do have some really useful contacts to be able to support that process.
I guess the education part of it is key, or the learning, as you say, because you're educating investors as to what the process involves and what might be asked of them if they are going to lend on a deal or invest in a deal.
Yeah, absolutely.
So how does the initial process work? People come to you with the ability to invest money in a project, and then you partner them up with the correct developer on the platform, and then the developer goes away, does the development. At the end of the project, the interest, or I presume it's an interest rate that they get back rather than a profit share.
Yeah, so lending, like I said, I want to stay outside of the regulated space for simplicity while I explore this concept. It is mainly geared towards debt lending where there is equity involved. Like if there was a joint venture, then I will be involving a third party qualified party that will be able to advise them on that. But initially, if somebody is interested in joining the network, one of the benefits is that because I'm creating community, is that they will have access to other people who are going through a similar journey to them. I think that investing in any industry can potentially be quite a lonely journey. So I think mutual sort of support and sharing experiences is really important as an experience for to me for these angels. Now, what the process is that if they once they've discovered something that they're interested in, and again, I am not proactively going to them saying, I want you to meet this person, I want you to meet that person. There's always a choice, and this is why I've chosen to start with a collection of 10 participating property developer businesses. Now, I have worked really hard to showcase diversity within that group of people who might own, anywhere between sort of £2 million property portfolio to £30 million property portfolio. They could be focused in the student kind of shared living space. They could be converting from commercial to residential lets into multiple units. Some of these projects, people could be looking for anywhere in between, say, £300,000 investment to I think somebody came in yesterday with £4 million investment that they're looking for. So it's a good range, but also what's important to me is to be able to represent the diversity of the people who are behind these businesses, right? Property is not an industry that you go to university to learn how to get into. Quite often people come from all sorts of walks of life and professional backgrounds, so I wanted to reflect that as well. There's actually a mergers and acquisitions lawyer who has become a property developer. There's an accountant who's become a property developer. All sorts of professional backgrounds, which I think bring different types of compatibility and levels of skills, transferable skills to property, which makes it more interesting. So I am not, like I said, I want to offer a variety so that people can explore different opportunities of businesses, different types of businesses to work with. Once they pick somebody, then I am going to be making sure that the investor is a real person. I don't go deep into the due diligence, but I will make sure they're a real person. If there's a company house check, I will actually check that there is something in there, that they exist, and I will get a good understanding of what their risk factor, risk attitude, the kind of motivation and the purpose that's driving them to actually invest into property, and perhaps what their experience in investing is. And I will have to get some kind of like a sensible feeling that once I pass this across to somebody, that they will actually have an interesting conversation. So that is the level of introduction I do. Now, I'm very careful not to go into more, because I feel like if the more you offer, then the more you can be seen to be, I suppose, inducing an active engagement to invest, and that's something that I want to be really careful on. I want people to take ownership on both sides of what they're entering into. So yes, and prior to actually coming on to the network, I did say there is a small subscription, well, it's a joining fee really. As part of that process, I'm really careful that I'm not targeting the general public, because I think there's a lot of potentially vulnerable people that could be accessing information about investing that they probably aren't, I suppose, qualified to, in terms of, you know, affording the risks, whether that is financially or, you know, I suppose experience wise. So part of the process of signing up, I do ask if this is a business to business transaction. That's probably of less concern. If it is an individual, then I want to make sure that they are either a high net worth individual, so I do actually ask them the questions that are you know, geared around their affordability. And also, if they are a sophisticated investor as well, I make sure that they are ticking the right boxes to declare themselves fit to be put in front of this information. Of course, this is, because it is, like I said, it's not regulated, this is not a necessary process, but I do push them through that process with a signed document, and to sign their declarations, make sure that they've read the terms and conditions, and obviously the terms of risks involved as well, before they are able to actually successfully join the network.
So what do you class as a high net worth individual? What are you looking for?
Yeah, there are a number of things. A high net worth individual, you know, from the top level, is somebody who earns over £100,000 in the last year, financial year, or somebody who has more than £250,000 in assets beside their own home. So some of these, the criteria is obviously taken from all the guidelines from the Consumer Act and the FCA guidelines. Now, I know that at the beginning, so towards, I think it was like the end of last year, there was actually a move to change and increase those barriers, I guess. But then obviously unanimously, it was decided that it would actually switch back to the old ones. There is a bit of a debate now in terms of whether or not it's right. These are the numbers that I've used. However, I'm finding that the ones that are probably having the most sort of productive conversations go beyond those brackets that I've mentioned, right? So for example, I've met a couple of investors recently who have exited quite disruptive tech businesses, and they may be you know, looking at, say, you know, tens of millions of pounds of assets. So depending on the appetite, depending on what have, you know, interested them in the past, those conversations may kind of be more fruitful, I suppose. But yeah, I think it's useful that they intentionally are looking into the property space in the first place. And I think that it's actually, if somebody is proactively investing, then property does tend to become something of interest at some point during their investment journey.
And how often do you take on new developers? I know you said you've got about 10.
Yeah.
Do they come round often, or is it a set 10 that you don't really move?
I have a waiting list. I want to keep growing that slowly and carefully, because on the basis that I'm spending my time getting to know the developers, I'm not opening them up very quickly. So I have a waiting list that's building up. And how I will add to that list will depend on the investor appetite. So once I'm confident that I am able to serve the 10 that I have fully, of course I can't control and I can't force anybody. I can't, you know, guarantee that all 10 will actually attract successful investment. But at some point I will make a judgment that I've got, you know, enough funds to be able to justify growing that, because yeah, it would be very unethical for me to kind of, you know, say that I can support people that I don't have the ability to, or enough appetite from angel investment point of view to be able to cater for.
And how many projects we have go in at once? I presume not all 10 developers are active all at the same time.
Well, they're all active. They're all constantly active because of the way that they are working on building their portfolio. So they tend to have several existing developments going on currently. So there's always an opportunity, there's always that opportunity of perhaps a little bit of development, mezzanine funding, development kind of bridging loan scenario. But because I'm very careful that I'm not accepting people who are desperately funding, like trying to find that kind of £600,000 to buy this property because I've seen it just now and I want to buy it. I want to give the opportunity for that relationship to build with the investor and perhaps actually talk about what the next project will be. So that is the main focus really. But if an angel find that compatibility really quickly and then decide that they want to put a pot of money into, so there's always projects available.
Makes sense.
Yeah, it's
And-
a really... Go on, Ro, sorry.
No, I was going to say, so 10 developers, 10 investors as well, and that's the focus for now.
Yes.
Brilliant.
Yeah, I mean, obviously, as many investors as possible, but obviously, I want to be realistic, and I'm focusing on quality, relationship building over the numbers at the moment, because my thinking is that if I've got some, even just a small pool of really engaged, well engaged, and truly high net worth individuals who are interested in this space, that's going to be way better than having thousands of investors who are probably more suited to crowdfunding type scenarios.
Yeah.
And what sorts of returns are people receiving on their money?
Yeah, that's a really good question. Quite often people are asking, as in borrowers are asking for between offering 8% and 12% return on the borrowing. Now, obviously, this comes with a mix of term length, risk of the project, as well as the amount that's being borrowed. So there is a bit of a matrix that all parties need to consider before that number is negotiated.
Yeah, makes complete sense. We often talk about that as well, where actually it's not just about the headline rate, it's about the risk associated with the project, the investor appetite, what their risk appetite is as well, and fundamentally them understanding the reward versus risk makeup and that balance, because a lot of people just get attracted just to a headline rate without really appreciating that there is a risk that they might not get their money back.
Yeah, exactly that. And I think that in itself is a really interesting topic. I was in conversation with an angel investor who has specifically actually created a SaaS pension pot to lend out to property developers. And, when we talked about rates, because I'm not necessarily bringing a deal to him, but I'm interested in understanding his risk appetite and what his reward appetite is. And the first thing he said to me was that he is not chasing necessarily the top end of the rate on the basis that he's been offered top rates before and he's still been disappointed or burnt by that experience. What he would rather do is actually have something that is consistent, build relationships that he's confident with, ending with a kind of a fruitful scenario, but also he understands that there's got to be money for the developer to give them the motivation to do a good job. So I think that's only something that he could have come to as a conclusion from experience. Because no investor from day one is going to say, I'd rather take less from you. That's a really good point. And such a good point, because I think the thing for all of us as borrowers or as developers is that you don't want to have to be going out and finding new investors each time. So you want to make sure you don't
over promise and under deliver, or shoot yourself in the foot in any way, so that actually when you have delivered your project, it's much easier to get funding from someone you've already worked with than have to go out to some sort of marketplace as such to find new investors. That makes complete sense, and it's nice that investors that you work with are experienced and have actually got some scars on their back to better make sound decisions as well, knowing that it's better to get invest safely and wisely rather than just for chasing the return.
So then my next question to this particular investor that I was speaking to was, well, you've had some terrifying experiences, right? So partners who have fallen apart, businesses that have gone down, risk of total money loss, right? Why are you still doing this? And why have you even created a pension pot for this exact purpose? And he said, well, Helen, at the end of the day, when it works, I believe in the fact that when it works, it's a brilliant strategy for my investment portfolio, because essentially I'm parking money for a short amount of time and the returns come back and I've had to do absolutely nothing for it. And so this is an investor that actually values the skills and the input that's being brought by. It's not that, I've had conversations in the past where, money is king, money is, but at the end of the day, I think when all parties understand what they're putting on the table, money is only one element. So I think that's, that's really, really nice that I'm able to kind of get to those sorts of conversations that are very transparent and very humble.
You see, it's very interesting to me, this, because I have a SaaS and I obviously organise a lot of funds for my customers. I have actually started lending out that SaaS as well to people for certain projects. I suppose I've got my mini platform within my brokerage to see what the customers are doing and which ones I want to work with and which ones I don't want to work with. So everything you're doing is very interesting, and I can see how it would work, because there's so many times I see on Facebook or in one of the training groups that they're saying, I need some money, or does anybody know an investor that wants to do a JV? And it's like, this is going to end in tears, just don't do it.
Yeah.
And it's crazy, the lack of care and consideration that you see throughout the market, and also the amount of advice people give out when they've never done this before at all. And it blows my mind. I'm just thinking, how can you be claiming you're some sort of guru at property investment when you've never done it before, you've got no financial background, and you've probably got no idea about anti-money laundering or anything along those lines? And doing it in a fixed structure where you're in control like you are, it makes it so much better for the developer and the investor. It's just a lot.
Thank you, Marc. I've thought a lot about how, some people have said to me, Helen, how are you going to be able to scale this? And I said, I'm not interested right now to scale this, because I think if I get the quality, it's a bit of if I can prove the concept that it works and it ticks along nicely, investors reinvest. I only need a small pool of trusted developers. Obviously, I need to keep replenishing that pot to give people a variety, because I think diversification is really important. It's key to any investment strategy. You don't want to put all of your eggs in one basket. But also, businesses change, people, so I've got to keep an eye on that and just make sure that I've always got, the best out of my own network. I can't, promise anything more. It's just the best out of my own network. And I'm proactively going out there and meeting people and engaging with them. And, I've got, I suppose, a really sort of a step ahead in the relationship building by sort of my previous line of work with the property management space. And I know that those property, I'm not saying all of them were Coho customers, but I know that those who actually were progressive in their thinking to think about how they were going to scale the operational side of their business, there's something a little bit unique about their personality and the way that they see how they want to build their business. That's a really good sort of, you know, edge for me, and a good hint to who that person is. Yeah, essentially, bring in the right people in a controlled environment. That's exactly what I want to do. I don't need massive numbers at this stage to be able to make that a success story. And then once I've kind of got that up and running properly, I know that I can carefully, you know, grow the activity in a very organic way, actually. Because I think if you want to grow too quickly, you do tend to become vulnerable to either getting too greedy or having larger overheads and adding that pressure to, you know, that then, you know, makes you, I suppose, vulnerable to risking more than you really need to.
Yeah, I agree, and I can empathise with that, because when you get to a certain stage in business, if you want to grow, you lose control. And you, in this line of work that you're doing, if you lose control, you lose the essence of what your USP is. That is a small little black book of developers which is, you know, worth a lot of money. When you go past that, and you may need to bring other people in who you maybe don't trust as well to do the job as you do yourself, that's where you lose your USP. And it's the same in broking, you know. If I take on another broker, I have to be very sure that they're going to do a good job, because it will backfire on us in the long run, because everything, well, my business is all built on reputation. So in yours it's going to be exactly the same, and I hope that you are able to scale to the level you want to and keep that control you need to in this type of business.
Yeah, there's all sorts of things, you know, that I'm finding out about. I think that if this goes as I plan, then there will be options. And I'm not talking about, you know, scaling. I think for some lines of work is a little bit overrated. I think people actually focus too much on that. For me, the importance is proving a concept. So there's lots of people doing what I do, right? Lots of introducers in this space, okay? And it's really where you differentiate and where you're unique. What can I bring to the table that somebody else can't? And for me, it's about my very unique experience, you know, coming from, because I can have conversations about tech investment as much as, you know, I can have in property. But marketing, you know, as a sales and marketing, sort of something that, you know, I did for Coho, and also creating the HNWI Awards, as you said, Ro, I've been exposed to things that other people haven't been exposed, and I continue to expose myself. Like, so for example, at the weekend on Friday I will be going down to London to the Lansdowne Club to MC a wealth management event for business owners, right? You don't get invited to do these sorts of things if you're not kind of out and about and actually engaging with the right kind of people. So I'm always building on that network. I'm always, you know, making the extra effort to actually get to know people. And what's interesting is that, you know, there are developers that have approached me, and, you know, perhaps I've seen them around, I don't know them very well. And then, you know, it only takes a phone call sometimes, you know, do you know this person? What's your experience been with them? That also helps. And I'm not saying that I believe everything that everybody else says, but when you're kind of at a certain point in the property world, I feel, you know, the trusted people circles, I think, becomes a lot smaller. And these are all people who are very active, always out and about, obviously spreading their kind of passion and love and experience for the property sector, but also they're, you know, we've got eyes and ears everywhere, I suppose, as a community, which is, you know, a small amount of protection, but I think it does add to it.
I do agree with that. It is the network or the small circle that you operate in is so much more important than the wider network that you may have. Because I had somebody come to me on Facebook this morning, and they'd seen all my social media stuff that I do, and this is a question that Ro and we talk about this a lot. What is the point of a broker? And the question he came to me was, why are you any better than any other broker, especially one that doesn't charge fees? And I said that, to be honest, I don't think you're the right type of customer for me, because that's not the first thing I'd be looking for in my broker about the fee. It would be about what the success rate is and things like that. So we sort of batted that back at him a little bit. But it just shows there are a lot of people out there who want to be in property investment who just aren't ready for being serious in it. They want to dabble in it, and there are even some people that dabble in it who then decide they're going to give up their job and jump head first into it without any experience. But there is a small selection of property investors and developers and professionals surrounding them who are excellent, and that makes up a very small percentage of the overall market in my place.
Yeah.
And it's getting to know those people that's integral to whether you'll be a success or not.
Yeah. And you know what? That is exactly it. The people who have been around for long enough have built successful stories. They have a track record. They're not overly leveraged. Although, having said that, it doesn't take much for the one project to take the whole thing down. You know, if it's a really, but I see a pattern as well. Those that have been, perhaps started with, accidental landlord, single buy-to-let, then discovered HMO, started building 4 or 5 HMOs, got to the point where it is quite hard to make a HMO work nowadays. But in terms of the numbers, if you are using other people's money, however, they're now looking at bigger projects. The bigger the project, the riskier it is. Do they have what it takes? What have they actually done to get to that point where they can be confident with that bigger project? And what is their plan for the next 2, 3, 5 years? What is their growth plan? Do they look ambitious enough? Are they overly ambitious? How are they going to mitigate any risks for the entire portfolio? Because you might have like several projects on the go. At the end of the day, it's not just about one pulling through. It's like it could be a domino effect. So you have to look at all of that, but also, what are the people like to deal with? I've had the pleasure of actually working with some of these people who have become, they're not professional speakers, but for the HMO Awards, I would have invited them to come and speak, because I think that real people, sometimes more interesting than, the people who are on every show, at every event. It's just sometimes you just want to get some real stories from real people.
So where do you class Rowan? Where do you class Rowan that? He's at every event.
You're at every event. But actually, we've met twice, haven't we? Perhaps. I think we've obviously kept in touch. Then obviously I enjoy your content. We've always had really good, transparent chats. I think it's really important when you're having a conversation with somebody that you feel like they're not holding things back, that they are actually, you can just feel how the conversation is flowing, where, that person's integrity, but also, what is it that you want? Sometimes it takes too much work to work out what they actually want. Why are we having this conversation? And if that is hard work, I feel really uncomfortable. So with you, Ro, it's always been very transparent.
Yeah, I mean, and for me personally, I'm very much he did indeed. He paid me off. So Marc and I met out in Mipham a couple of years ago, and that's probably the red wine he's referring to. But for me, I mean, I work alone, so I'm I'm more of a quality over quantity. So going back to what you were saying earlier on, it's very important, because you are only ever one deal away from really messing things up and having to sort of start from scratch, and that can be, we're talking low volume, high margin, and high risk. That's the game of property. But I like to surround myself with people who I can learn from, and that's why I get involved in a lot of events and get involved with initiatives like this where we can actually learn from other people. But yeah, I'm definitely more of a quality over quantity. But yeah, it's but it's great. I think, as you've said, getting out there, networking and learning from people, that is one of the best ways to de-risk and also, improve your own chances of success as well, because you're able to learn from others and utilise the expertise of others as well.
And you'll
Excellent.
sympathise with this, Ro, when you're out and about quite a lot. It is hard to find the right events or right groups of people for you. Everybody is different, and depending on what you're looking to achieve. So I think if somebody's looking for going out and meeting people, just have a really good think about what it is that you want to gain out of this time that you're going to invest into, because I find it knackering. As much as I love networking events, I love attending all these events and meeting new people. I did have a conversation with somebody the other day, and they said, I said, well, who is it that you want to meet at this event? And they said, well, I'm not like you, Helen. I just go and just see what happens, I'm like, well, I'm not that kind of, oh my God, I will only go into an event if I know that there's, quality, a person that I'm going to meet there. Because it's not about that. And I'm always surprised with, the kind of quality of people that I do meet, always end up finding something of value. But I think it's really important to kind of know what it is, that what will you find valuable? What will you be happy with? And be a little bit intentional about it, because otherwise you're just wasting your time.
Yeah, I agree with that.
Yeah.
I actually learned that lesson from my English literature teacher back when I was in sixth form. He always said you should only read a book if you've got a purpose to read that book. And it's exactly the same with networking. You should only go to a networking event if you've got a purpose for that networking event, i.e. you want to meet a certain person, or you want, you need to be in the same room as a group of people, or you want an introduction. Whatever it is, go in with a purpose. Obviously be open-minded, but you need to go in with a purpose of what you're looking for and what you want to get out of it. I think we're all on the same page there.
Very much so. Just conscious of the last few minutes of our live session for today. It's great that you're talking to investors and developers, Helen, who are part of the network for Property Angels. But for those developers who are out there who are looking to raise finance, what are your sort of top tips and advice and guidance for them in terms of what they can be doing to improve their prospects, their profile, and be more successful at raising finance?
Absolutely. So it's all about building that, creating a space where you can be surrounded by your types of people. I think that's just the most important thing, because not any angel investor is going to be compatible and the right one for you. So have a real think about what kind of person you want to meet with and work with, and then think, well, how am I going to meet that person, right? So as an example, just 2 weeks ago I decided to take an annual membership at the Champneys Health Club, and it was a bit of an indulgent personally, but I've already met several people who are compatible and I'm having interesting conversations with, right? So think about who they are, how you're going to meet them, how you're going to make yourself available, but also think closer as well. I would say think about who you know and introductions that because it can't harm to ask. I start a lot of sentences with, can I ask a cheeky question? You just never know what might come your way from that, and this is how I've built my network so quickly. You just got to get out there, remember who you are, and also don't be afraid to tell people what you do and what you want.
The question I like the most asking people is, who do you know will benefit from what I do? And always just be quiet and never let them off the hook. Always get a name out of them. There will be somebody. So, Helen, who do you know? I'm joking.
Good question. I like that. Brilliant. Well, this has been really, really informative. It's great to hear about the journey of Property Angels and how you've got there, and some of the challenges and opportunities ahead for both investors and developers. So we look forward to following the progress. Are we going to see you at any more big events as well? I mean, obviously we've met at a few of your events in the past, and some of the events that we've also been members of. Helen, what's next on the? I think you mentioned you've got
I mentioned, I'm in London on Friday. I'll be hosting and emceeing a business owners wealth summit by the Empower Group, and then after that, I believe it's the Property Investors Awards, which is coming up at the end of November, and I'll be there. Yes, I basically invited myself to be with one of Helen Turner's tables, as I know her from obviously the.
I'll see you on one of those tables as well.
Oh, brilliant! Okay, excellent. So we shall bump into each other again.
we will indeed.
Thank you very much.
Brilliant. No, great to have you on. And for anyone else who is looking to get involved in our future sessions, please do drop us a line. If you, as one of our listeners, have any questions for any of our guests, then please do also drop Marc or myself an email. We'll leave our contact details in the show notes. And obviously, for those of you listening live, you know where to get hold of us through the normal social media channels. So thanks very much, Helen. It's been great to have you on. And look forward to seeing you soon.
And good to meet you, Marc.
Yes, very nice to meet you, and thank you very much for your time.
Thank you.
Welcome to the Show Me the Money podcast, Unlocking Property Finance. Join us on an exciting journey into the world of property finance, where we uncover secrets, strategies, and opportunities that can turn your property dreams into a lucrative reality. Welcome to Show Me the Money, Unlocking Property Finance.